In 1989, Bulgaria had almost 9 million people. Today, it has around 6.4 million. That's not a recession. It's not a temporary dip. That's the equivalent of erasing an entire major city from the map permanently. And there was no war, no invasion, no financial implosion like Greece in 2010. Just numbers, quietly moving in the wrong direction for 3 decades. According to projections from the United Nations, Bulgaria could fall close to 5 million people by mid-century. That would make it one of the fastest shrinking countries on Earth. So what actually happened? Most people assume the answer is simple: low birth rates. That's only partially true, and it's lazy analysis. As Bulgaria's fertility rate sits below replacement level, but so does Italy, so does Spain, so does South Korea. Those countries are not losing a quarter of their population in a single generation. The real driver isn't births, it's exits. Since the 1990s, more than 2 million Bulgarians have left. That's nearly 1 out of every 4 citizens. After joining the European Union in 2007, migration accelerated. Suddenly, a Bulgarian engineer could legally work in Germany. A nurse could move to Austria. A software developer could relocate to the Netherlands. And when a 25-year-old leaves, you don't just lose 1 worker. You lose 40 years of taxes. You lose future children. You lose domestic consumption. You lose entrepreneurial energy. You hollow out the age pyramid from the bottom. Today, Bulgaria's median age is around 46. Nearly a quarter of the population is over 65. That puts enormous pressure on a pension system designed for a growing workforce. But here's the uncomfortable truth. People don't leave countries randomly. Migration is a vote. And Bulgarians have been voting with their feet for 3 decades. So why? It's not simply wages. Bulgaria's labor costs are low, but they've risen steadily. GDP has grown since the 2000s. Infrastructure improved after EU accession. Sofia has modern metro lines. Highways expanded. On the surface, it doesn't look like collapse. But growth numbers don't tell you how a system feels to live inside. Bulgaria consistently ranks near the bottom of the EU in corruption perception. According to Transparency International, it remains one of the weakest performers in the bloc. That matters because corruption isn't just about bribes, it's about predictability. If contracts depend on political loyalty, if courts lack full independence, procurement decisions are opaque, investors hesitate. And when investment hesitates, wages stagnate relative to Western Europe, which means skilled workers leave. The European Commission has repeatedly tied funding to judicial reforms and anti-corruption measures. Billions in EU cohesion money have flowed into Bulgaria over the years. But reform momentum has often stalled amid political instability. Frequent elections, fragile coalitions, short-lived governments that create something worse than crisis. And drift kills confidence. Now layer in demographics. Healthcare spending per capita remains among the lowest in the EU. Cardiovascular disease rates are high. Smoking remains widespread. Life expectancy is the lowest in the European Union. Doctors and nurses also emigrate. Why earn a fraction of a German salary at home when EU mobility gives you options? So the country ages, the workforce shrinks, the tax base narrows, and here's where it becomes a feedback loop. Estimates suggest Bulgaria's informal economy may account for roughly 30% of GDP. Cash payments, underreported wages, tax avoidance. Citizens distrust institutions, so they avoid paying fully into the system. But when tax collection weakens, public services suffer. When services suffer, trust declines further. That's not ideology. That's structural erosion. You cannot fund Nordic-style social systems with partial compliance. And when young professionals see limited upward mobility, they don't protest. They relocate. This is what makes Bulgaria's situation unique. It's not dramatic. It's rational. If you're a 28-year-old engineer and Germany offers triple the salary, stronger institutions, better healthcare, and higher long-term stability, leaving isn't betrayal. It's optimization. Multiply that decision by hundreds of thousands of people. The result is demographic contraction on a national scale. Now here's the deeper question. Why hasn't EU membership reversed the trend? European funds have upgraded infrastructure. Agriculture subsidies stabilized rural incomes. Recovery funds after COVID injected capital. But money cannot substitute for institutional trust. If reform is slow, If prosecutions stall, if political elites recycle, citizens interpret that as inertia. And inertia is fatal in a competitive continent. Because Bulgaria isn't competing with its 1990s self. It's competing with Germany, Austria, and the Netherlands for its own people. That's the real competition. So what happens next? There are only 3 realistic paths. 1. Import labor. Bulgaria has started recruiting workers from Asia, but Bulgaria is rarely the final destination. Many use it as an entry point to broader EU labor markets. Retention becomes difficult.
Automation.
In theory, robotics and AI can offset workforce shortages. But automation requires capital, investor confidence, and strong legal frameworks. Without institutional clarity, large-scale automation investment slows. 3. Structural reform. Strengthen judicial independence. Increase transparency. Reduce bureaucratic friction. Rebuild trust. That sounds abstract, but history shows it can work. Countries that reversed emigration did so by improving institutions before demographics recovered. But reform is politically expensive. It disrupts entrenched networks. And that's the dilemma. Bulgaria is not collapsing tomorrow. It is not a failed state. It is a functioning EU member with economic growth and modern urban centers. But if current demographic trends continue, it becomes smaller, older, and fiscally tighter every decade. And here's the larger lesson beyond Bulgaria. Population decline in developed countries is rarely just about birth rates. It's about perceived opportunity. When citizens believe their effort compounds at home, they stay. When they believe it compounds faster somewhere else, they leave. No tanks, no riots, just departure gates. A country doesn't need to implode to disappear. Sometimes it simply exports its future. And once enough of that future settles somewhere else, reversing the flow becomes the hardest economic challenge of all.